Good afternoon. This is session 2 of our mentorship strictly for beginners, and beginners are the ones enjoying this particular session because it's introducing you to the world of Forex, making you understand what you are about to engage in. Jubal, exactly. So Forex trading. Um, I'm going to take you through. I'll mention a bit about the history, and then we'll move on from there. So the whole history of currency or buying and selling or exchanging started from the barter trading, where if I have something and then I need something from you, I'll present what I have to you, then you give me what you have. So I'm exchanging. So let's assume I have salt, and then person A has salt, but then I have tomatoes. Then person A says, okay, I'm also looking for tomatoes. So what we can do is we can come together. I'll give you my salt, then you give me your tomatoes. Do you understand? But we evolved. Currencies came to place. We had things like the gold back currency, sorry, the gold back system where the currencies were paired with gold. So per each dollar, we'll see that is backed by a certain amount of gold. So or per each any currency, understand, is backed by a certain amount of gold. Do you get it? Now, that system was not very, it couldn't take us into the modern world. So they evolved into pairing the currency with the dollar. So that's why America is the most powerful country. I don't know about that. I don't have the facts. And then I'll just leave it as that. You understand? So for every currency is paired with the dollar. That's why you see pairs, and then they are comparing themselves to the dollar. You see currencies and say, oh, my currency is bigger than the dollar. My currency is smaller than the dollar. Therefore, I want to, go and take the dollar, or I want to exchange my this for that. I want to exchange this for that. You understand how it goes? So now, when it evolved into currency trading, when it evolved into spending money, it created the, I don't have the word for it, but I'll use this word. It created the loophole of people seeing that, oh, I can go to this country because I have a weaker, how do you call it, or I have a stronger currency. I can take my currency to this country whose currency is weaker, then I'll go and exchange it there and then live as a rich man. You understand? So as time went on, this is like a storyline for you to understand what you are entering into. As time went on, it evolved, it became more regulated, and then um, it became more regulated and it evolved into an over-the-counter business. Do you understand? That's with the help or with the intervention of technology. It became an over-the-counter business where you don't have to go to another country to exchange their currency. You can just sit on your laptop, sit on your phone, find a data or a broker that is going to give you accurate data, analyze, and then place your trades. Then you are going to do what you are going to earn, you are going to lose in the market. I had to bring lose because people think, because of how decorated forex traders are as of now, people think, you're just going to start trading and then boom, that's it. You make a lot of money. You buy Tesla, you buy this, you buy that. No, that's not how it works. You understand? So I'm here with you. I'm here for you. I'm going to coach you into how to be making the profits, how to also promote the money. So you go GA cash out. Understand? Use it for whatever you want to use it for. Okay, so let's move on. Let me get the slides in. And boom. Uh-oh. I want to show only the. Let's forget about that. Okay, so introduction to forex trading, a guide to understanding the world's largest financial market. Now you may think, why is it called the world's largest financial market? Wherever you look in the world, right, there is, wherever or whichever country you are in, they spend a certain currency. Now that currency forms part of the international, or the world economy. I'll not say international, because if I say international, that means I'm limiting it to a certain or a specific group of countries, but the world's economy. So every country has a certain currency, and that currency is going to be used to what? Is going to be used to transact. You do trades. So let's assume someone in China wants to buy something in Ghana. He would have to exchange his currency into the Ghanaian currency. That's provided it's allowed by the laws of trade. I don't know the laws of that kind of trading, you understand? But change it into Ghanaian currency, pay to the supplier, and then the supplier will give the products to the Chinese people, and then they will take it back to their country. Do you understand? So you have to understand how powerful currencies are. Do you get it? Whereas, some countries do not have gold, they do not have, these natural resources. So we cannot possibly be looking for countries to, pay for our services or our goods and products in gold, because some countries genuinely have low natural resources like gold, silver, bauxite. Charlie, hey, I did try. I know some of the natural resources, but let's move forward. Um, they pay with their currency, right? So the currency, the money, the paper we see now has formed part of the world's economy. It has become the world's, means of transacting. Do you understand? Now there are many other means now. Some people still use gold. If you research, or you watch documentaries and movies, you see that the royalties, you understand, when they are going to do their things, they send jewelries, chains, diamonds, golds, you understand. There are other means of transacting, but let's limit it to currency for now. Do you get it? Now, what is Forex? Forex is a global OTC market. OTC means over the counter. Now, what over the counter is trying to tell you is that you can be wherever you are and then still trade Forex. Do you understand? OTC, over the counter. That means as long as you have internet service, as long as you have a phone, a laptop, anything that can connect to the internet, you can place your trades. You can place your trades and win some money in the market. Not win, but make some money. If you say, oh, what's happening? If you say win, it almost sounds like you are having to gamble, you understand? And I'm here to tell you that the Forex market is not a gambling market. Do you get it? So the more gambling spirit you have, the more you are going to lose all your money. You understand? So what is Forex? The global OTC market. Foreign exchange is the global financial market for trading currencies operating over the counter. Now, I mentioned this earlier, is global markets. That means every country can participate. Nigeria, Ghana, Somalia, Malawi, Lesotho, USA, Canada, Australia, China, Japan. Wow, I know a lot of countries. Zimbabwe, Zambia, Uganda, South Africa, Ghana, Togo, Benin. I know a lot of countries. Do you understand? But I'm mentioning all of that for you to understand how big of a market it is. That means anywhere you are, as long as you have an internet connection, that's why I stated here that it is operating over the counter. As long as you have an internet connection, then you can participate in the global financial market for currencies. Do you understand? And then as we go ahead, I'll make you understand the profit component of it. Do you get it? So now the profit mechanism. You profit if you correctly speculate that one currency will strengthen against the other. So for this particular point, when you look at countries like USA, this is the perfect example. USA, they recently hosted the World Cup. Do you understand? Now, hosting the World Cup means that a lot of countries are going to, or a lot of people are going to migrate from their countries and come to your country. Why? Because they want to witness the game. And as they are witnessing the game, it's also going to attract a lot of people, a lot of business people to invest. So you see people selling their products around where the World Cup is going on. It's boosting the economy. Do you understand? So if you look at the US economy now and say, oh, per the activities going on in the US market, I'm going to what? I'm going to buy a stock, or I'm going to invest in the, okay, now you can invest in the currency pair actually. You can say, oh, I foresee the US currency doing well. So what am I going to do? What I'm going to do is that I'm going to buy a lot of US dollar, put it down, and after the World Cup, or months or weeks after the World Cup, if I see that the value have increased on the market, then I'll go and change it into my own currency, provided your currency is lower than the US economy, has less value than the US currency, the US dollar. Do you understand? Exactly. So as you think like that, if you end up being right, that's where you profit. So it's stated here that you profit if you correctly speculate that one currency will strengthen against another. Do you understand? So what I took you through is like the thought processes or the thought patterns you are going to have if you are going to participate in the forex markets. There are many other things you would look like, and as we go forward, I'll make you understand the technical analysis side of it. This is just the fundamental, where you look at things going on in the market or in a certain country, and then per your analysis, you project that their currency is going to be what? Is going to be stronger than yours. So you use that analysis to what? To buy or sell the currency. So the fact that you are right or wrong is going to determine where you are going to be. And then I'll advise you to always be, no, not always be right, to mostly be right. You understand? And I can teach you how to get there. Now, market scale. The market scale is where it gets interesting, because once you understand how grand this market is, you will not rush into entering, you will not rush into wanting to make profit, because it states over here that the FX market trades a massive $7.6 trillion a day, and is open 24 hours a day. No, this should enter your head well. The FX market trades a massive $7.6 trillion a day. That means every 24 hours, $7.6 trillion is going through the market, up and down. No, not 7.6. That means by the end of every day, right, the market would have processed $7.6 trillion in it. Do you understand? So the value of every trade, the value of every day in the forex market is $7.6 trillion. That should tell you how grand it is. So if you are entering this market, it should not occur to you to rush to make money. No. What should happen to you, or what you should think, is that you are going to relax, gain the knowledge, gain the skills, practice, build the systems that can get you the profit, and then what? Go ahead and profit. You understand what I'm saying? Now, understanding the exchange rate. The exchange rate is the price of one country's currency expressed in terms of another country's currency. Did I hear someone speak? Oh, that's great. That's great. So let's go back. The exchange rate is the price of one country's currency expressed in terms of another country's currency. Do you understand? So you see that if you've been to the bank before, you see on the board they've written $1 is equal to 0.0000 point something. I'm using a lot of zeros because compared to the Ghanaian currency, the dollar is far ahead. You understand? We need like 11 cedis to to make $1. Do you understand? Great. Now, that is what we call the exchange rate. That means if I'm going to exchange this money to you, this is how much is going to take from me. So if you enter the markets, let's say you want to deposit into your broker, right? And then your broker allows you to trade only in the US dollar currency, right? What you are going to do is that you are going to check their rates. That's why most brokers reduce their rates so that they can attract a lot of people. So the rates they are giving you is what they call the exchange market. Are you getting me? So the exchange market, sorry, the exchange rate, not exchange market, exchange rate. So let's say, yes, I have a paper here. Where's my pen? Wow, my pen is not here. Okay, my pen is not here. But I can demonstrate it to you. I can type it on the phone so that you see what I'm talking about. Hold on a minute here. I'm getting my phone to. So you see something like this. 0.086. That's the exchange rate of the Ghanaian cedi to the US dollar. Do you understand? Interesting, right? So the exchange rate is the price of one country's currency expressed in terms of another country's currency. That's why I said when you go to the bank, you see it that $1 is equal to 0.086 Ghana cedis. So it tells you how much of the quotes currency. Now I'll go into details about base and quotes, but hold that thought for a minute. It tells you how much of the quotes currency is needed to buy a single unit of the base currency. The market is in constant flux due to the range of participants. Now, the second sentence is what you are going to put down for a while. Let's focus on the first sentence. To trade in the forex market, you'd have to trade in pairs. Do you understand? You are looking at the market with the lens of I'm trading in pairs. That means you cannot trade the US dollar alone. Or what would you be trading it against? And how would you make the profit? I hope I'm clear. So you'll be trading it against another currency. The same way when you go to the market women will say, oh, see a dollar ni there, dollar ni ye din, dollar ni ye mre, dollar ni ye say, dollar ni ye that. Do you understand? They are trying to tell you that it takes them a lot of Ghana cedis to change into the dollar before they are able to purchase whatever they want to purchase. You understand? Before they are able to purchase whatever they want to purchase. So it tells you how much of the quotes currency here. The quotes currency is the Ghanaian cedis, and the base currency is the dollar. Do you understand? So they are going to trade in another country, and they have the Ghanaian cedis. So the Ghanaian cedis now becomes the quote because you are going to another currency to take goods from there, but the receiver over there, sorry, the seller or the supplier over there only wants to trade with you if you have the currency he wants. So that's going to be the base currency. You are changing or you are converting your money into that currency. So that becomes the base currency. So it tells you how much of the quote currency you need to buy a single unit of the base currency, just as I showed you over here. So you need 0.086 of you. So let's assume the Ghanaian dollar, sorry, the Ghanaian cedi, Ghanaian dollar, we wish. The Ghanaian cedi, no, we wish. I mean, we are capable, Charlie. The Ghanaian cedi, it tells you, so let's assume the Ghanaian cedi is the base. That means it will take you $0.086 to change to one Ghanaian cedi. Now let's change that. Let's make it the US dollar, then the Ghanaian cedi rather. Please hold a little for me, okay? So United States dollar, that's right. And then Ghanaian cedi, that's right. So now we've changed the base and then the quotes currency. So you can see over here. Oh, can you guys see me? Let me see if you can see me.
You love see you.
You can't see the screen. Okay.
You can see now.
So you see that now at the top there they've written one United States dollar equals 11.63 Ghana cedis. Can you see that?
Yes.
Exactly. That is what they are trying to tell you. That means if if you are trying to change into the base currency, if you have the quote currency, you are changing into the base currency, it's going to take you 11 points. I've forgotten the value. Let me see. 11.63. Thank you, Fred. 11.63 Ghanaian cedis to change to $1. Do you understand? So that is the exchange rate. The exchange rate is just trying to inform you. You see, information is giving you a signal that if I want to participate in the US market, this is how much money I'm going to have to use to get this value of the dollar before I can proceed to do business. Same way you check the exchange rate for GBP, you check the exchange rate for Swiss franc, you check the exchange rate for yen, you understand? Japanese yen. So they are trying to give you how much of the currency you are having will be needed to convert into the currency you want. Do you understand? Good. Now, what is traded in Forex? Now, I mentioned earlier is money. Money, currency. Money is the asset. Money is the blood of Forex markets. Do you understand? So the way human beings, right? You see, when you watch movies, when you're unfortunate for one of the bad guys to stab you, you'll be bleeding until you die. You understand? If there is no currency, then the forex market is waste. Maybe we would have to look at other markets like the digital exchange market, so the digital currency market. So we'll be talking about things like Bitcoin, EFTs, those digital assets that the world is trying to jump on now. You understand? Now, since money is the market, since money is the asset over here, you are trading one currency against another, especially essentially buying a share in a country's economic condition. You get what I'm saying? So now, the same way I mentioned and said that, now it's almost like you are investing in the country. Do you understand? So let me make it clear. United States is producing, let's say, Tesla Cybertrucks, right? As they are producing those cars, it's supposed to attract something. Do you understand? So you see that car and then you like it. So you even buying that car is almost like you are investing in the country. Do you understand? So now, if you are trading on the global exchange market or the over-the-counter global trading market, it's almost like you're also investing in the country. So it's like you are buying a share. So I buy this amount of US dollar. As the value of that country increases, it's going to also increase the value of the dollar I have. So the more people are buying Tesla Cybertrucks, the more people are buying, right? Tesla is also going to have to do what? It's also going to have to pay a lot of tax. Why? Because they are earning more. And as they are earning, the US economy is growing large. And as it's growing large, the value of its currency keeps increasing. So if you buy dollar, it's like you own a share in the country. You understand? So you know how shares to operate, right? If 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 you if you buy a share in a company and the company is doing well, like MTN released shares some years ago, and those who bought early when the shares were like 40 pesos. I remember they used to do adverts on the TV. I remember, and then my mom would be asking, what's this about? What's this about? You see, because we were not very informed, we did not have the chance to participate in it. We would have gained some cool cash, you understand? Not a lot of money though, but some cool cash. You bob. So it's like you put your money into that system or into that country, and as the country grows, your money towards it grows. Now, the economic reflection. The currency price is a direct reflection of the country's economy compared to others. This calls for me using the Nigerian naira as an example. If you look at the Nigerian naira, Charlie, let me see. If you put 1 million, 1 million naira to cedis, let, let me see, let me see, let me see, let me see. I hope you can see. Yes, you can see this. It takes you 8,504 Ghana cedis to get 1 million naira. 1 million. It takes Ghanaians 8,000, just 8,000 to get 1 million naira. Do you get what I'm saying? So, well, let me go back to here. So it should tell you how bad the Nigerian economy is. Now, I'm not, just trying to slander the economy. No, I'm just trying to make you understand that that economy is not doing so well. If it was doing so well, it will take a lot of Ghanaian cedis to convert to the naira. Now, let's switch to the USD. Do you understand? The USD is doing a lot of works. Like they are constantly evolving, they are constantly producing, they are constantly finding ways and means to better their economy. That's why they made it a point, they made it their life's purpose to host the World Cup tournament in their country. Why? Because they understand information, very important to they understand that if they host this thing in their country, it's going to what attract a lot of people, and the more the people come, the more they spend money, the more they maintain money in the Forex, sorry, in the US country. And the more they maintain the money in the US country, the more they grow as an economy. You understand? So the currency price is a direct reflection of the country's economy compared to others. So if you see $1 is equal to 0.0, sorry, $1 is equal to 1.62 Ghana cedis, it's trying to tell you that the Ghanaian cedi is 11 times worse, or is 11 times lesser than, yeah, that's the word. The Ghanaian economy is 11 times worse than the US economy. Sorry, less. Sorry, let me say it again. The Ghanaian economy is 11 times less than the US economy. Do you understand? Good. Now, we come to currency classifications. Currencies are categorized based on liquidity and then trading volume. Oh, I do not see this coming. Oh, currency classifications. Currencies are categorized based on liquidity and trading volume. Now, the majors, you see the way, how do I put this? Okay, there are some natural resources that are classified as very, very valuable. The golds, the diamonds, the bauxites. I don't know the value of bauxite and the others, but rare,
The oil,
the what?
the crude oil.
Crude oil, gold, silver, crude oil, those things. You see, those are the ones that are termed as the ones that produce a lot for the country because of its high value. You understand? But when we come to things like livestock, cattle, sheep, or we come to things like cotton, come to things like sugar, you understand? Those are like less, they produce, or they have less value than the prior, the one that I mentioned, the gold, the crude oil, the silver. They have less value than that one. That's why they classify the currencies. They are trying to make you understand that these are the frequently traded pairs. And then the frequently traded pairs involve the US dollar. All frequently traded pairs involve the US. So Euro US dollar, GBP US dollar, CAD US dollar, Australian US dollar, JPY US dollar, and all sorts. Do you understand? They're trying to make you understand that these are the big world economies. So if you are entering those markets, you know that you are going to get a considerably good amount of money or pips. I'll introduce pips to you on our next lesson. So considerably good amount of money if you trade those markets. Why? Because they are sure bankers. You understand? So those of you who are familiar with Lotto, when you are going to stake Lotto, you see sometimes the Lotto man will tell you, hey, this number there be sure banker. He's trying to tell you that this number, he believes with everything inside of him that once you stake once you stake this number, you are going to get what? By the way, I think the concept of Lotto is very, it's like a back mindset. Like you just go and take some numbers, 3, 14. Then people stake their life earnings on this, by the way. I'm just saying. So the majors most frequently traded pairs, they involve the US dollar. So you see, I've made examples: US, Euro, USD, GBP, USD. Now the crosses, they are the crosses are the ones that, you know, they are also good economies, right? But they are just not paired with the US dollar. So like the way I was saying, livestock. Livestock also produces revenue for the country, right? But it's not as much as the US dollar. It's not as heavy as the US dollar. Do you understand? That is why they don't consider it a major. So they pair it with. So you see Euro and GBP. They pair it. It doesn't mean the crosses do not have, you know, clean price action. Oh, I made it a point not to mention these terms at the beginning, but it doesn't mean the crosses do not have a high probability of giving you a good amount of money if you engage in that market. They, they always do. Do you understand? It's just that there's there's lesser trading volume. The amount of people participating in the cross currencies are not as much as the amount of people participating in the major currencies. So yes, you trade the cross currency, it will take you a longer time to profit from it. But the major currency, it will take you lesser time to profit from it. Why? Because a lot of trading volume is there. It's a very liquid market. You see, when we say something is liquid, right, it's flowing, it has current, it's flowing, it's not static. But when water becomes block, it can be there. Like when we say when we this was the word that just skipped me. Iceberg. You see, when you are watching those movies or those documentaries where they say huge ice in the middle of the ocean, is static, it's not moving. Do you understand? Even if it's moving, it's slow. Do you understand? And even that depends on the current the water is taking it on. So it's slow, it's moving slow, it's moving slow. But if it's clean water, no ice, you see the waves will be coming. If you've gone to the beach before, you see the waves are just coming. That's a good example for you to understand what I'm talking about concerning the majors and then the crosses. Now the exotics, they are pairs involving a major currency and the currency from a developing or smaller economy. So something like Ghanaian cedi and US dollar is an exotic. Do you understand? I had a definition of exotic, but I want to be sure. So let's search it up. Exotic meaning. Exotic refers to something that is unusual or fascinating because it originates from a distance or foreign place. So it's like what they are trying to say is like these currencies are not really looked at. So the definition says it originates from a foreign place. It's like when someone asks you, okay, what foreign currency or what currency pair do you trade, and you say US dollar GHS, they're going to look at you like, Charlie, like what are you doing in the forex market? The reason is that it looks foreign, it looks alien to the forex market. Why? Because people don't really trade it. Do you understand? That's why you see, and then I earlier I spoke about every currency being paired with the US dollar. That's why this one is not being paired with other countries' currencies. It's paired with the US dollar as a matter of fact. Why? Because the exotics, you can't just leave them there too, because you can't say GHS GBP. Yes, there's GHS GBP trading going on, right? But we are trying to make you understand the whole world economy in general. So that's why they classified it and said this is exotic, and then they are always paired with the what involving a major currency and a currency from a developing or smaller economy. Oh, let me clarify this, right? Let me correct my mistake. Involving a major currency. So that means yes, US dollar, GBP, Euro can be paired with the GHS. Do you understand? Exactly. But I wanted you to understand from the higher perspective, because the world's economy now is running with the dollar. Do you understand? So that's where the misunderstanding came. So now that I've clarified, you should understand. So that's why someone can bring GBP into the country, right? And then you can still get an exchange for it. Do you understand? They are exotics. So it looks very foreign to the foreign exchange markets. It looks like, oh, these pairs are traded, oh, but they are not very traded. People don't really know about it. Do you understand? Now, how to trade the Forex market? Open your ears. While there are several ways to participate, yes,
So,
yes, please ask your question.
I wanted to know, how does a currency move from an exotic to a major pair?
How does a currency move from an exotic to a major pair? And let me
Yeah,
go back to the slide so you understand something. If you look at this, they say currencies. Can you see the slides under the currency classifications?
yeah, I can see the slide.
Okay, good. It says currencies are categorized based on liquidity and trading volume. Do you get it now? So should should Ghana become a better country in terms of value, do you understand? People are going to want to participate in the Ghanaian market, hence pushing it from the exotic to the major or the cross. Because if you look at pairs like NZD, JPY, and some other currencies like CHF, you'd see that time ago, if you check the history of it, time ago, they were not really considered as currencies that should be traded in the major market league. Do you understand? But as time went on, because those countries advanced, people now everybody wants to import something from China. They're looking for China products because they know that China produces massively and they produce fast too. Do you understand? Exactly. So people want to invest their money in China. They want to take something from China. They want to buy technology from China. They want to buy this, that from China. Do you understand? So the trading volume going on in China is expanding. Now China can comfortably sit down and then be going toe to toe with the dollar. Not yet though, but then right now they're even going toe to toe. Do you understand? They're even going in terms of advancements. That should tell you that as time goes on, China is definitely going to be a major. I don't know if it is yet, but it's definitely going to be a major. Why? Because the whole world is trying to buy, purchase, is trying to put value in China because they understand the value China brings out. I hope it's clear.
Yeah, yeah, it's finally clear.
Thank you. Thank you. So, how to trade the Forex market? While there are several ways to participate, we focus on a common derivative product. Now, derivative product means that you are not really trading, the currency pairs. You are trading the data of its price. It's like, so derivative comes from the word derived. So when you say maybe 2 plus 2 and you say 4, and then they ask you how did you get the 4, you say, oh, I derived by the 4 from adding 2 to 2. Do you understand? It's trying to tell you that when I added this 2 to this 2, I got the answer 4. So I derived the 4 from doing this and this. Let's use another example. Let's use something like food. What? Okay, So you see, when you are making stew, you understand, you put a lot of things. So they say, how did you get this quality stew? You say, oh, I derived this stew by doing this, that. So the derived tracking is like they are tracking the data of the asset class, and then they are giving you a uh, they're giving you an on the spot, like a live update on what that currency is doing. So sometimes you check the currency on your trading view chart and you check it on Google and you see that there's a little difference. Why? Because Google is giving you the value according to maybe 24 hours or 12 hours, but the chart you are looking at is giving you the live. So they are deriving it from the real time trading that is going on. You understand? The real time tracking. They are tracking the markets. So every move happening in the Forex market, they are tracking it, and updating you live to be able to trade the Forex market effectively. Good. Forex CFD. Now, this is where I like to flex my knowledge small, because Forex now will make sense to you more if you understand what CFD is, because this is what we essentially trade, right? It will make you understand why Forex is not a scam, to make you understand why Forex is not gambling, to make you understand why Forex is not bet. There's a side of Forex that focuses on betting. It's called spread betting. You understand? I'm not going to go into that because I do not understand it. So I'm not going to feed you information that I do not understand, you see. But Forex CFD is contract for difference. So it says here that contract for difference is a financial derivative used to speculate on price movements without owning the underlying asset. So so the contract for difference, right? So what you see on your phone when you check your chart, what you see, your chart is like the platform for you to enter the contract. Do you understand? So let's see, um you are watching your chart, and then you see a move, and then you click buy. So immediately you click the buy, you've entered the contract for difference. Now the difference here means that should you buy at this level? Can you see my hand?
Yeah, we can see your one.
Yes, good. If you buy at this level and then price jumps to this level, right? That is the difference. So the difference, the space between this finger and then this finger, that is the difference in price. So you've traded the contract for difference. Do you understand? So that difference, depending on the lot size you use and the margin you use, that difference is then calculated. The difference in the price point from here and the price point over here, that difference is what is calculated and is given to you as your reward. You understand? So contract for difference is like you are trading the difference in the value of the price. So I first mentioned it's like you are investing in the country, right? Now you understand Forex more, because now it will be like, okay, if you are investing in the currency, where does the money go to? Does it go to the country? No, it doesn't go to the country. It's between you and then the market through your broker. So your broker is who is connecting you to the what? To the market. Do you understand? So contract for difference is trying to tell you that anytime you are trading the currency pair, what you are doing is you are trading the price difference, the real-time price difference. So price goes here, maybe you bought at this level and price goes here. The difference, the space between this finger and this finger. I'm not trying to use the terms now because it might confuse you. You understand? That's why I'm chill. That's why I'm using fingers and other terms as examples. So the difference between this price point and this price point will be calculated and it will be given to you. Now, if you buy at this price point and price rather drops and it comes over here, right, and then hits your stop loss, your loss will be calculated and to be deducted from your account. That is why it's called contract for difference. That means the difference can either be up or be down. Are we clear? Okay, good. So you see that I stated over here that other participation methods include retail forex, spot FX, currency options, and currency exchange markets. I didn't want to stress on that because I've not understood it. And I didn't try to because that's not my focus, you understand. I'm trying to tailor your focus, but as we go forward, right, I'm going to explain it into detail so that those who feel like CFD does not work for them can do what, can find a place to belong. Because the whole point of next gen FX is to uncover the vast world of digital money making so that you understand. So if Forex CFD does not work for you, maybe Spot FX may work for you. So I'll do more research on it and make you understand it proper so that you can participate in it at your own will. So that's the vision of Next Gen FX, is to make sure digital money making is available to each and everybody. It doesn't matter the corner you are in. If you are under a rock, we will find you and will make you make money out of this market. Why? Because 7.6 trillion, one person cannot make that money. So let's move on. Now, currencies are quoted in pairs. I think just by explaining the first part, I pressed into this one. So I'm just going to brush on it. Every FX transaction, FX here means Forex. Every FX transaction involves simultaneously buying one currency and selling another. So let's say you have the Ghanaian currency, the Ghanaian cedis. You want to exchange into the dollar, right? You are buying the dollar, but as you are buying the dollar, you are selling the Ghanaian currency. Why? Because to even get the dollar, that means you are giving the Ghanaian currency out. Onushishin. So it's like, do you understand? So it's like you are giving the CDs to the maybe the dealer in the forex bureau to for him to give you dollar. Do you understand? So you are selling the CD to buy the dollar. That's why they call it a simultaneous buying and selling of the currency. That's why I was saying that you cannot do forex with just one currency. It is in pairs. You will never see a forex market being traded just USD, just GBP, just Euro, just JPY, just Ghanaian CD. No, it's always in pairs. Do you understand? So I've just brushed on this and then we'll move on. Base and quotes currency. The first listed currency is the base currency, so it's on the left. Now, having said this, let me go to trading view so that you see something. You can even, oh, let me see. Hey,
You say,
Charlie,
the move out, bro. I swear.
you know what is paining me? I promote this trade, bro.
You come out.
Yeah, I promote as you go into profit small. Cause I didn't want to be watching the charts and then my mind will be distorted. I made profits though, but it could have been a lot more profit if I left it to go and hit that target. But no stress, no stress. There's a lot of opportunities, you understand. So let's know. Now, now let me take your mind to this place. You can see, okay, let me expand it rather. Hey, it dummy wa. So I swear it pain me. Okay. So now you see something like this. This is GBP USD. Let me go back to the slides and see. The base currency is always on the left. So you see GBP is paired with USD, but then GBP is at the left side. Do you understand? It's at the left. It's at the left side of it, and then USD is at the right. The reason is that GBP is the base. Do you understand? So it's like quote currency, right? The quote, you are bringing it from the back to get the front. That's like a quick example. It's a quick example. You are bringing it from the back to get the front. Do you get it? So that's why they normally put the base currency. No, not normally. That's the standard. Do you understand? That's why the base currency is at the how do you call it? The left, and then the quote currency is at the what? Is at the right. Do you understand? Good. So the first listed. Say again. Were you talking to? Were you asking a question?
And I was saying that the base currency is on the front, and then the quote currency is on the back.
Yes, yes.
The left show the base currency, and then the right to show the quote currency.
Okay. Yes. So great. So example over here. If GBP USD is 1.2500, it means 1 GBP equals 1.2500 USD. Do you understand? That means if you have one Great British pound and you go to the United States, it's going to give you more United States currency. Why? Because the Great British pound is higher than the USD. Do you understand? Great. Key trading concepts. So from this point on, I'm going to say you are being, introduced well into the Forex market. So you have to pay attention. The bid price, the ask price, and then the spread. When I started trading, this concept was, shit, I shouldn't have opened the trading view. Now it's just in my mind. Anyway, the bid price, the ask price, and then the spread. So the bid prices, let me use this analogy first. So let's say you have a phone, right? You bought that phone at 3K, but you are going to sell it to a dealer in Forex, in Circle, right? He is not going to buy that phone from you at 3K. Never. Do you understand? He's either going to buy, maybe you will never meet the value you bought it for. He's either going to buy it, unless you are a wholesaler, and then you go and buy it. Is it wholesaler? Yeah, wholesaler. You go and buy it in bulk, and then you add your own profit. Fine. But let's say, let's say there's a dealer right in front of me. I buy a phone from him at 3K. I go home. Then I come back the next day and I say I want to sell the phone to him. He's not going to take 3K. He's either going to take 2.9, 2.8, 2.7. Do you understand? So the bid price is the price at which the broker is willing to buy the base currency from you. Are we clear? So let's say you have United States dollar, you see, and you want to sell it. The bid, so like the dealer has bid his price. So the way you see those movies or documentaries where you see maybe the guy wants to sell his car, his house, then they start bidding. I bid $1 million. Someone will say 1.2, someone will say 1.4. That is the bidding. Do you understand? But in the Forex market, you don't, it's in a constant flux. Do you understand? So that's why I was saying that if you are approaching it with the perspective of the Forex market, you would have to understand into detail what it is. Do you understand? Because you may go to the Forex bureau and then the bid price is static for the whole day. But in the Forex, it's in a flux. Do you understand? Because they are giving you a real-time data of what is happening in the market. So anytime you want to buy Anytime the market is going, or the broker or whoever you are dealing with wants to buy the currency from you, their bid price is what you are going to sell your own currency at. Do you understand? So it's like the phone. I buy it from the dealer today. I go home, I come back tomorrow. He's not going to buy it for me at 3K. He will never. Unless he's a nice guy. The Forex market too is not a nice person, please. It is a system. You either strategize and pick from it, or it picks from you. And when it's picking from you too, it does it with a lot of smiles. It will leave you in turmoil if you don't understand what you are doing in the Forex market. Just the way when I saw the chart right now, my mind miscalculated the whole slides that I'm about to the whole slides I'm about to teach over here. My mind miscalculated everything, because that's what the Forex market does to you. You understand? So you have to be firm. You know your strategy, you understand it well, you have your plan, you have your levels marked out. You enter the trade, you wait, it reaches here, you exit. You know, now enter the trade and be doing, oh, maybe it's going to go down, maybe it's going to go up, then you exit. Sometimes immediately you exit, no, then it goes up. And people think that the Forex market is monitoring them. That's the same mindset I had when I started. I was thinking, why are they looking like, do they have a spy somewhere watching me? Because sometimes immediately I exit, the market shoots. You understand? Good. Ask price. The ask price is the price at which a broker is willing to sell the base currency to you. Do you understand? So you go to the you go to the Forex bureau market, right? Now he's asking, he has given you a price that he wants to sell the base currency to you. That is the ask price. Wow, am I explaining this well? Yes. So he has stated the currency, the price that he is willing. That's the price he wants to sell the base currency to you. Do you understand? And then the bid is the price he wants to buy the base currency from you. Do you understand? And the ask is the price is want to sell the base currency to you. Do you understand? So the same analogy. When you buy, no, now you have your phone, right? You are going to the market to go and sell the phone. He has given you his price. This is the price I'm going to pay for this phone. He has given you his price. The example will not really make sense, because you see, most times the dealers give a static price, but the Forex market is fluctuating, so you can find your way around it. You understand? But the example I gave, right? He has given you a certain, so it should fit right into this. He has given you a certain amount he wants to buy the phone from you, and then he has given a certain amount he's going to sell the phone to you. He's not going to come up or go up. Sorry, come down or go up. Wow, this was incredibly, okay. Let me take it again. One last one. Am I making sense to you? Is it clear? Are you understanding?
Yeah, we are.
Okay, good, good. So the ask price is like, he's asking of you this particular price. He's asking this price to you. He's telling you that I want 3K for I want 3K to give you this phone. That's the price he's asking of you. He's asking of you this price to give that currency to you, that phone to you. Do you understand? And then the base is like, you are rather selling the phone to him. Do you understand? The ask is when he is selling to you, and the base is when you are selling to him. So the base, no, he is going to give you a price he wants. Do you understand? So the base is like, the bid is when he gives you a price. That's the price he's willing to buy the currency or the phone from you. You would have to, I'll upload this to YouTube. ASAP. The reason why I've not uploaded the first video or the first lesson is that the video got corrupted, and then I wanted to announce it, but I felt like I can work on it very fast and then upload it, but it's not you know turning out well. So I'll record it as a separate video and upload it. Do you understand? Good. So by weekend, by Sunday, everything should be on YouTube. The YouTube channel will be the link will be sent to the group. Since it's a new YouTube channel, if you search it, you might not see it. So I'll send the link to the group so that you can start subscribing to it. Good. So the bid price is like he's bidding. He's saying, I want to give you this for this. I want to give you this for that. But the ask price is, I'm asking you this to give you that. If you go back and you listen, you understand. I'm asking this price to be able to sell this phone to you. And the bid price is, I want to give you this price so that you can give me the phone that you are holding. You understand? And then the spread. Now, this is good. The spread is where the brokers make money. You get it? The spread is a critical thing you have to understand if you are going to enter into trading. Is very, very critical. The spread is where the brokers make money, because you are looking at the spread and you are saying that, okay, if I buy a phone, if I pay you 3K, right, to buy a phone from you, and I come back tomorrow, you are telling me you are going to take 2.9K if I want to give you the phone back. That reduction, that 100 CDs is the spread. And on the Forex market, it happens fast. So you see that the actual price that the currency is trading at, your broker would have added a small amount. He's going to add like 0.2 or 0.03 or 0.0 something. That is how he makes his profit. So when you buy, so it's like I go to the shop, maybe they sell fan yogo. Maybe the company sells it to them 3 CDs, and then they are selling it to me 5 CDs. That is the spread. You understand? In Forex, we call it spread. But over there, is like, we call it, I don't know how they call it, maybe profit. You understand? That's the amount he has calculated and added to the product. So that when you come and buy, you'll be able to gain. Because he's not taking the fan for free. Transport, he goes there himself. You understand? So you are going to have to pay for the service they are giving you. That is how some brokers charge commission and spread. Some brokers just charge spread. Some brokers charge commission. No broker leaves spread out of the equation. Spread is always in the equation. Spread is always in the equation. So if you have questions on the bid, ask, and spread, please ask me. If you don't, let me know so that we move forward. So I'll know that I was able to explain this well. Oh, okay, since no one is speaking, I'm going to assume you understand. Now, ready to start. I intentionally put the slide ended at bid, ask, and spread, but I intentionally put this over here. Ready to start. Are you ready to start? Having heard all this about the Forex market, has it sparked your interest? Is it creating, is it giving you, is it making you think in a way that you want to participate in the Forex market? Is it making you, rethink the terrible things people said about the Forex? Some people say, oh, it's a scam. Some people say it's a Vieta senior brother. Some people say many things. Some people say many false things about the Forex market. So now that you have been informed, are you ready to start? The key word here is speculating. Okay, please speak. Were you speaking?
I wanted to say, I wanted to say we are ready to
We
enter
are
the market
we
because
are
we are
active.
very overly.
We are going to tear this market. I'm telling you, bro. From here on, it's just growth on all sides. Just close your ear to what people are saying. That's noise. You see, I heard yesterday when a preacher was preaching, Pastor Toby, right? He said this: people are not poor. People, something must be causing that poverty. What is causing the poverty? it is misinformation. Just the same way God gave a word to Adam, right? He gave a word to Adam, but the serpent now came and misinformed Eve. And Eve also came to misinform Adam. So it's like they took what was information and then they turned it and they started believing what they've turned. That's why God now cast them out of the garden. Do you understand? So when they were in the garden, they were facing prosperity. But when they left the garden, they were in poverty. So what creates poverty is misinformation. Do you understand? So now that you have been informed, what steps are you going to take? So let's go back to the slides. Start speculating. The first step is to determine whether you want to buy or sell the currency based on your market outlook. And these are some of the market outlooks I stated, like analyze economic indicators, and you choose your currency pair, you determine your position, and then you manage your risk effectively. These are like just points I put there so that you start to get familiar with the forex market, start to get familiar with whatever is going on. And then that'll be all for today. Thank you very much for tuning in. Now this is the part where I like, this is the part where we discuss a little bit, we share some one or two, we say some one or two things before we end the call. Fred, from how you are speaking, I can see you know about the forex market. Of course, I know that, but how did you get introduced to the forex market, and have you gained from this particular session? Because I said a lot of things. Did you gain a deeper insight, some misinformations? Has it been cleared? Let me know your experience.
I mean, first of all, for me, how I got introduced into the forex market was back in high school. I used to have this friend. During prep time, he never came, but then I was wondering, yo, like, why is this guy never in the class? But he's always like trying to figure, his finance out.
Yeah.
So one time, I caught him like one on one. I was like, yo, every time prep time, I always see where to go. And he didn't want to say much until I met him, I think, in the dormitory. And he went into hiding. Sometimes these foreign guys, they don't want you to know what they are doing. I don't know why. So,
They
I
are
had this
hiding it.
experience.
They'll be in some corner watching their phone.
So I'm like, bro, what did they do? I mean, I even thought it was Osaka Wamu or something. Ah, bro, what this guy they do? I went there and then he was like, oh, like this is what he's been busy doing. He's doing chart. He told me chart. He didn't tell me forex or anything. Just said, oh, he just studying some charts. It's like, okay, no problem. So it was later after we're done with school, and then he was like, yo, Freddie, you're my close friend and whatnot. So I want to put you onto this forex thing. So we met up, and then he introduced me to the whole concept of forex trading and all this good stuff. I mean, I never saw forex as a scam because already my friend already like let me know what it's all about. So I was, I had a
Okay.
fair idea of what getting myself into. Uh, and from then, that's when I think I started in 2021, and it's damn near 5 years. We're in 2026.
That's great. That's great. That's great. That's great. And this person, I can only see B on the call. Uh, Please, can you unmute yourself? Do you know?
But
Do you,
please myself.
I mean the next person. I can only see B on the call. I don't know the name.
That's Lorraine.
Oh, okay, okay. That's good. That's good. Okay. So,
You want to know?
Laurentia, do you trade?
No, not yet, not yet, not yet, not yet.
Is why is there? Okay, okay, okay. So, um, I'm sure having tuned into this session, you gain a deeper understanding of what Forex is. And if you want to participate, then you can go ahead. As we go forward, I'll explain more about brokers.
Yeah, I would surely like to participate.
Good, 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 good. Okay, okay. So thank you for joining. I'll end the session here. Charlie, Fred, my mind burst. Like I for hold that trade. Oh.
Child, that movie, I know you lie, bro. I swear,
It be sweet too.
Sunday, you go gap serious, bro.
So you are still
Go gap
holding it
the whole room, bro. I the whole
active. I'll find another
bro.
entry. I have to enter this market. I'll find another entry.
Bro, if indeed, bro, this is the bullish move. Then this entry that you come out to the you do your body some way.
I swear. Because it be sniper. Oh. It be nice. Oh.
Ah, bro, it be nice pass, bro. Nice pass.
Eh,
This one, that New York thing, I can't rex it. Or times it won't repair, then go somehow, push up to the main direction. Because you
ah,
see, as New York,
talk. I dey
yeah,
hear you.
no, I want somebody to get talk.
See, I get is something I found in. I have slides on it. I did a lot of research on it. New York is mostly is giving, you see, when there's an impulsive move upwards, price, and then price cannot just be gapping up, or you see, it has to create a balance. It has to create a balance in the market. So New York is like the resting period, like when landing session goes slow small. So let's say um 5 a.m., 6 a.m., 7 a.m. You understand? You realize that mostly that move happens and goes at the continuing direction around 8, 9 a.m. You see New York
Yeah.
time. I have slides. If you finish, I'll share it with you. I have slides on it, man. This New York thing is something we should look out. If we can find a model in that space, we can be making eternal money. That's what, eternal money.
I'm serious.
Eternal money. Okay,
So,
Charlie.
the fact that sometimes sometimes you can be in a mood from Asian session, and
Mm.
then bro, by the time you reach London, everything reverses, and then you reach New York, then Charlie, it just pushes to the same direction we're trying to take from Asian, and it's like, yo, Charlie,
Wow,
I don't even know what to do. Like,
crazy, crazy,
like,
crazy.
the direction is everything else. Like, for
Yeah,
you to get you in the right direction, Charlie, you need.
you make a lot of cash.
Hmm. But yo, last but not least, Salah, I just want to thank you for taking your time out of your day to actually push, the whole movement of this Forex thing. Because I remember at first it used to be words, and now it's become something, real that we are all like about to learn and be successful from this whole meeting. Bro, I just want to appreciate you for taking the time to even believe in yourself, be able to even make this, opportunity a real thing where people can even take advantage. Yo, Charlie, it's not easy, but yo, the fact that we've seen our fellow brother do it, and I know for a fact that we're going places. So God richly bless you. And
Thank you.
it's only greatness from here.
It's only greatness, bro. I assure you. I assure you. We are going to get there, and thank you too for joining and listening throughout. Cause for
Always,
me,
always, always, always,
this is what I
always.
live for. This is what I live for. So thank you for appreciating and then going through it. And when I post the video too, you can go back and then gain some more insights. So I'm going to end the call here. That's if you don't have any other thing to say. End the call here and then make the video ready and post.
All right. God bless, bro. God bless.
All right. Thank you for joining. We'll meet next week, Friday. We have 2 more sessions to go. Okay.
All right.
Okay.
Can't wait for the live trading part, man. I
Uh,
can't wait.
I'm telling you, I'm itching for that, Charlie. We'll have, you
Hey,
see, we get the, we go get the funded and then we go teach these people how it's correctly done. It's not noise, you understand?
bro.
Active,
Can't wait.
active. So let's move forward.
All right.
All right.
Take care.
You too.